everybody. Welcome to Monday. The S&P 500 was up 1.56% today. A really good bounce back. Didn't make back everything we lost on Friday, but we went from a red shirt day to a green shirt day. One of the things I'll mention here is that we've had, I think, two or three times now where these big announcements happen on a Friday. And by Monday, a lot of times over the weekend, things have kind of softened down. I think they're doing the announcements on purpose on Friday to limit the impact to the stock market and give them a chance to maybe have a negotiating time period before the market opens up again on Monday. Of course, the cryptocurrencies are open all the time, so they took a big beating this weekend. Matter of fact, one of the things that seems to be happening in a lot of these announcements is that there's some front running with some of the money that happens. Somebody made 160 to 190 million dollars shorting, some cryptocurrencies here on this last move. They got in just before the announcement that happened. So we've seen those types of things quite a bit here. So it's a little bit frustrating. However, as I talked about on Friday, the market, was coming down a bunch, but the reason the market's upward is right now is because people really believe that Trump is going to, back off when he needs to. And I think with this particular situation, he's going to have to back off anyway. I really feel like China kind of has the upper hand here. On one hand, China has this need to sell to the U.S., but they've basically reduced that need pretty dramatically. So as I mentioned back in 2018, when those first tariffs started, they were at about 22% of their exports were going to the U.S. That was down to 15% when these tariffs started. And so now, the amount of product that's being shipped to the U.S. is substantially less. So, for example, in September, it was 27% less. However, in China, their exports were 8.5% higher this September versus last September. That's because they're selling more to the rest of the world, and the rest of the world is coming more to them for different things. So, they're probably feeling good about that. But the real issue that happens here, and the problem that, that we have is that, if they don't need our market that greatly, that was one leverage point. Today, Secretary Bessent, the Treasury Secretary, came out and said that we have some leverage points, specifically semiconductor software, distribution. So that's something, that they feel U.S. access to U.S. financial markets. I got my cheat sheet here. 300,000 Chinese students here in the U.S. I suppose it could be expelled or whatnot. And then, of course, they get aircraft parts from GE and Honeywell that they can't make themselves. So, that's one of the things you look at. Okay, what do we have that they can't do that we can use as leverage points? Unfortunately, for rare earth metals, here I'll give you a list of some of the things that can't be made, or if they are made, it's extremely difficult to do so without rare earth metals. And again, remember that China has 75% of the mining capability of rare earths, but more importantly, they have 90% of the processing of rare earth metals. So if you remember back to the Ukraine situation, for a while there, they were trying to work out a deal that we would be able to get some of the rare earth metals from Ukraine. But that's just the raw form. It has to still be processed, which still has to be done by China. So they have a tremendous control over the world, really, in this particular area, because you can't make F-35 fighter jets, Virginia-class submarines, Tomahawk missiles, radar systems, drones, wind turbines, electric vehicles. You need the magnets, smartphones, computers. Most high-end tech gadgets have rare earth metals in them. On medical diagnostic equipment, and that's not a comprehensive list, but so essentially, if they cut back on rare earth metals, they can shut down the country for all intents and purposes. And so we're scrambling around now trying to develop some of this ourselves. But it takes a lot of time, especially for something like this that tends to be a little bit on the toxic side, and it's not environmentally friendly, and is why China probably has a lot of the processing, because we used to be one of the dominant players of processing rare earth metals. But again, just from an environmental standpoint, I'm sure it was easier to do that and cheaper to do that in China. And so that scenario is going to force the U.S. to the table, and already probably hopping with the stock market falling 2.7% on Friday, combined with what happened over the weekend and different talks. And Trump came out and said, "Don't worry about it. It's going to be fine." And the market kind of came back pretty heavy today. I mentioned on Friday, the dip buyers are still out there and they're not out of money yet, so they're going to be coming in. It's still going to be probably a little bit rocky here because they don't have a better framework in place. Still threatening, November 1st, 100% tariffs as far as that goes. They are supposed to be meeting here at the end of the month. Trump said no, but now we're hearing today that, that's probably going to happen. And I'm not surprised by that. I don't think that this is a scenario that either side probably wants to miss out on as far as that goes. So, you know, the part that's good about this is that the pressure that China has can maybe keep the tariffs lower altogether and kind of make things work better. They probably feel the tariffs are already too high, even without the 100%, obviously. And so they're going to use the leverage of these rare earth metals to try to get a better working deal, which, could be a good thing for all of us, just because, at least in the short term here, it's really difficult for the US to start automatically making all of these different things. And even in the long term, I think it's probably impractical on some of these things as far as that goes, just because labor costs here are so much more expensive. But we'll see how that works out as far as that goes. But anyway, really interesting day. Good time to be in the market, obviously, today. I wouldn't say that we're completely back yet, so we'll have to see how this week plays out. But the dip buyers came back in again, and eventually, they'll dry up the money in that area. But I think we have a run here to go, just because, again, if you look at kind of the pattern of what happened in the .com run up, the very last couple of years were huge. And so we're 3 years into what would be a normal 5-year run, and we might have some room to run here. However, caveats being, of course, tariffs work out terribly, much worse than we thought. Consumers fall apart because of that, or the deportations, might even be worse than the tariffs, at least for some of these industries, and et cetera. So, have to see how all of those things play out. They're still coming at us, but when we look at the overall trajectory of this market, and you look at the power and you look at the momentum, it's too strong. It's not going to stop without something pretty serious hitting it. So we'll see how that works out. So anyway, that's what's going on today. I look forward to again talking to you tomorrow. Thank you.